Hello Cronians, this is Alex from Kronos Trading. Today I'd like to be recording a long-awaited video that will essentially demonstrate how you can use the Omega V2 while trading the nasdaq futures. You can also trade the SP 500 in futures with this strategy. It works really great. US 30, US 100, just anything for day trading. So this video is for those of you that just want to day trade the market, be in and out within a few hours and do this like essentially every day. So, all right, let me not waste any more time and get into the charts. So that would be my daily layout. Here are the indicators that I'm going to be using for this strategy. The main one is probably 80% of our strategy here, the Kronos Omega V2. You don't even need at this point the gamma strength and momentum, although I like to keep them on just for visual purposes to keep track of where the market is. Like, is it overbought? Is it oversold yet? To kind of keep a record of the status. But if you do not use it, obviously you can just stick to Kronos signals and keep these four indicators on: deviations, flow, momentum, gamma strength. And then you have the MTF screener, which is multi-time frame screener. So essentially what it does is that it flickers from one color to another in real time. It shows you what the 5 seconds, instead of being the 5 minute here, what the 5 second, 10 second, 15 seconds. So if this blue is the price above the Omega V2 ribbon, or is it below the Omega V2 ribbon? Okay, that's what it does. And I use this to confirm my entries. So it's very, very important. If you've been in the group chat, or if you've been following my trading for a while, you know that I use this as my ultimate confirmation to enter the trades. So what else? I have the Omega V2 on. So this is the ribbon, as you can see. And this is the original Omega trend right there with these dots. Then I have the yesterday's open, high, low, close. Okay, I only keep the yesterday's close on right there. Obviously you can just stylize it as you wish. So this is the point of interest that I keep on my chart at all time, because as you can see here, the price usually reacts to this area very strongly. Okay, so also I know some people that literally just have this on their chart and that's all they use to enter a trade, right? Like they essentially place their buy limit order here and then have a little bit of wiggle room as a stop loss with like a 3 or whatever 2R ratio, and they pray, so that's all they do all day, that's literally it. And it works for some people, so why not? But that's not my strategy. My strategy is, and by the way, for the purpose of this video, I'm going to have also on the side the 15-second chart open, so we can just monitor a little bit more closely what the price did when it started to mean revert. Okay, and mean revert means that, for those of you that don't know, that we are starting to be in an extreme area, extreme either to the downside, okay, so oversold, or to the upside, so overbought. And in this case, it would be overbought. It's like gamma strength, momentum, we're starting to be in this like red zone. The price usually will start to revert to the mean, and the mean is typically represented here by the Omega V2 or the Omega trend. Okay. Yeah, and I also like to have the VWAP on my charts. So in this case, I would have it here because point of interest, just like so many traders trade solely using the VWAP. So I like to have it on, as you can see, the price reacts very, very strongly. So let's get into the actual day trading strategy that I've been using for literally years. And that's all I do if I want to make a quick buck on the market. I just open my computer, I do the market open for like an hour, and that's it, bank. Also what I could do sometimes is when I experience a bad entry. So in this case, this could be a bad entry. So we'll get into this very soon, and I'll explain you how you can recover a losing trade. Okay, stay in the trade. Either you take a small loss, or you stay in the trade, but then you just average down your price while still having a stop loss somewhere. Obviously, but be like more of a mental stop loss than a hard stop loss, that's already like plotted on your chart. Okay, so here's the market open. Just for the sake of the video, I have this session thing on. The market opens here at 3:30. 3:30, that's my time, but local time in New York, that would be 9:30. Okay, so that's the market open. Market, as you can see, goes like really, really strong, starts pumping to the upside. Usually I don't like to take a trade within the first 5 minutes because market is very unpredictable. I'd say from the first 5 to the first 10 minutes, it is just very hard to predict what is the market going to do, as it's just going to whipsaw or like range or whatever. So I like to just wait and see what the direction is. Here we start pumping, and I guess if we do the replay, you'll start seeing like Kronos signals will very likely be already overbought. As you can see, we have literally all are overbought right now. And let's just like replay and see what's starting to happen a little bit. So as you can see, not yet. So essentially what I'm looking is the MTF screener. I'm looking at this here to see if start seeing some red for confirmation. of a drop. Okay, so here, okay, not yet. Yeah, so that would be a little bit too late, and this is why I wanted to keep this chart on. Because in live data, you would have probably start seeing here your signal at about this candle right there. So probably around here, this would have been your entry, okay? But why am I keeping this on is because I want to show you what in real time, where you could have literally put your entry for this short. Let me just go back right there. Okay, so where the market's pumping. So you could have had your first entry about here, right? I have the Omega trend on the 15-second chart. Okay, but where do you put your stop loss? First of all, what I like to do is to set my first entry here. I enter with 50% of my position, of my risk, and I like to risk 2% of my capital per trade. So essentially I enter with 1% risk on this candle, and then my second percent, I would add it to where I would normally put my stop loss. And where do I normally put my stop loss is at the most recent high in this area. So that would be my second entry, right? And then right there, I like double this ratio. So that's 15 points. And then double that, so that's 30 points. Okay, so that would be my stop loss here. What happens then? When I re-enter, my double entry is here. So my average price now is right there in the middle, okay, halfway between my first entry and my second entry. So that would be around here. My stop loss is, where was it again? It was around here. Okay, and then I always target a 1 hour. And as you can see, with this very strategy, like almost every time, this is just really, really crazy because almost every time I have a perfect 1 hour using this very strategy. This almost leads me to think sometimes like, is there, a hedge fund that's trading this strategy? Is there maybe a lot of other traders that are trading this way, with the double entry system in order to manage their risk and get out at a profit, even if the market is kind of not going your way? But it's the market giving you a second chance. And this happens literally every time. So I might be too early in this trade. However, as you can see with this system, this double entry system, I was able to not only get out without a loss, but actually lock in a profit here. So that would be a 1 hour right there. What happens? The market just keeps pushing, like liquidating all the shorts. Essentially, like all the people with their stop loss here, they're getting liquidated. So market keeps pumping, and eventually we start having some signs of exhaustion. And again, by experience, I can tell you that if the first breakdown fails and we have another breakdown, let's say within 5 minutes or 2 minutes from the first one, then typically the second one will work. So here, when the market starts to revert, you can have your first entry, your first 1% risk, and your second percent risk. But here, I'm going to slightly put my stop loss around there, okay? And the market, as you can see, like just starts dumping, right? You can also use, for extra confirmation, the help of trend lines as well, like visual trend lines. If you see that we start breaking, typically this is the sign that the market is stopping to do higher highs. It's a sign of exhaustion. I like to just plot this like really easily on my chart, and again, extra confirmation. A lot of traders are using this, all right? So why not just do what other traders do? To find confidence. As you can see, that would have been a magnificent reward for your risk, like literally just huge. What you could do is, and this is what I would have done in this case, is target the VWAP. So whenever the market is touching VWAP, then I take off, let's say 80% of my position. In this case, that would have been a 5R for the day in literally one trade. But then guys, you'll see, obviously this is not gonna stop there because we're gonna take the mean reversion again, okay? We're just going to play a roller coaster here, essentially. One thing you can do also when you're in the trade is you can essentially trail your stop loss. And what does that mean to trail your stop loss is that here, as you can see, that's the first pullback, second pullback, right? As you can see, the Omega trend is always protecting us. However, here it did not protect us, but I would have not been stopped out. Why? Because this is my trend line. My trend line is respected, so I trail my stop loss above this trend line to make sure that at all times I can just maximize my profit as much as possible. However, my first target was hit because it was the VWAP in this case, okay? It could be VWAP, by the way, guys, important. Could be VWAP, or also could be the daily open or previous day close, whatever, is the same. But yeah, this is typically what I target, VWAP or this. Market starts dumping nicely, and we start being oversold. Oh, what a coincidence. Oversold, extremely oversold. We start having a reaction here. Okay, so what is this reaction? So our target is hit, okay, we're fully out of the trade. And what you can do if you want to be very conservative, you can either you enter with a little bit of your risk here, this one. So you have your entry signal around here. If you only use one screen, which is this one, you would have had here on the multi-time frame screener, you would have already had the 5-second and the 10-second blue signal in this case. So let's say you enter around here, okay, with 1. And then once you cross this trend line, whenever the candle, the 15-second, closes above this trend line, so around here, then you can scale into the trade. So you add your second percentage of risk here. So your average price would be around, let's say around here. And then your stop loss. Personally, I like to have at least 20 points, but again, it's kind of discretionary, so it's up to you guys. And I like to target at least a 2R ratio. So here in this case, they would have target like this order block right here. You need to have a little bit of knowledge about market structure and stuff, especially for take profit. But you can see this is an area of interest. This support, and here turning into resistance. So that could be a good target. And clearly a lot of the institutions targeted this area, okay, for take profits. So again, it is experience. The more you practice, the more you'll become, I guess, at ease with setting expectations of your trading, but also setting proper stop losses and targets. So yeah, in this case, let's say I've closed like 80%. So this is also what I like to do is you never know with the market, like, you know, the market can just like, boom, like break through a resistance and go to the moon, okay? So I always like to leave a runner, which would be 20%. And then using my system of trend lines, okay? For trailing stop loss, I would have closed my runner here. So essentially the overall trade would have been like a 1.7 or something like that. So yeah, guys, that is roughly my strategy. We could go over like literally days. I just don't want this video to be too long, but you could go for days like that. As you can see, these are my daily sessions. You can just go for days like that using this very strategy all the time. As you can see, you always have a move up and then a move down. Sometimes, however, you got to be cautious because the move down is like very limited, okay? So from my experience, you always go from 1.5R to sometimes 10, 20R. It really depends on where you set your stop loss. But be very careful, guys, of all these points of interest, which in day trading are usually the VWAP and here yesterday's close. So that's it for this video. If you like it, please give me a thumbs up, or please like share your opinion in the chat, because I really want to give as much value as possible to the community, and just let you know that, yeah, these indicators are really, really badass, and that's all you need. Only one indicator essentially to be profitable while day trading the NASDAQ or the SP 500. So keep it up, guys, and I'll see you in the next video. Cheers.